I'm going to talk about my background, how I got to where I am right now, and then we'll just kind of spin off from there, okay? So I grew up in Texas. I grew up outside of Houston, down in Clear Lake. My dad was a chemist at NASA, and so after NASA, then he started in and worked in the real estate business. So grew up outside of town, outside of Houston, and I was a runner. I was always a long distance guy. So I got a scholarship to run track at Baylor University down in Waco, Texas. You're going to start putting this together in a second, right? So went to Baylor, I went to TCU and studied agricultural economics, got a master's degree there, and then eventually went to MIT in Boston, which I finished the program there to get my MBA back in 2005 at the Sloan School. That particular program, you had to be under 40, started your own company. The company had to be a certain size. I applied, and the fools let me in. So when I was when I finished at TCU at the Ranch Management Program, that's where I studied agricultural economics. I got a degree in finance from Baylor, and then a degree in agricultural economics from TCU. That leads you to very, very narrow career paths. One of them is agricultural lending. That is absolutely just as sexy as it sounds. Not at all. So I said, no, I'm out. Well, I had seen Trading Places with Eddie Murphy and Dan Aykroyd. If you've never seen that movie, I've seen Wall Street a gazillion times. And those scenes on the trading floor of all the people doing the funny hand signals and yelling and screaming. So when I finished at TCU, I applied and got a job with a brokerage firm, Prudential Securities, which is in downtown Dallas. It's a building with the big X's on it at night. It's Renaissance Tower. I applied, I got in. At the time, I made $500 a month. And I drove a K5 Chevy Blazer that got about 5 miles to the gallon. So you want to talk about broke. So started there as a cold caller, literally just like you see on Boiler Room. All the big fancy brokerage houses, by the way, we're talking about 1993 here. All those, you see those videos and you see movies like Boiler Room and all those stock jockeys on the phone. What's the newest one? The Wolf of Wall Street. That's how it was at the big firms too. That wasn't just a thing for those little small squirrely firms. They sent me to San Diego to literally train me how to be a phone banging chimp and call people and try to sell them stock. And it was awful. Every day I went to work, I wanted to stab myself in the ear with my pencil. It was awful. However, I worked for a couple of guys that were in the commodity business. They were trading stuff like crude oil and cattle and corn and wheat and soybeans. Now, I had a degree in agricultural economics, a degree in finance. I was like, trading, that's where I want to be. So at that time, all the business was done in Chicago and New York on the trading floors. The people yelling, screaming, all that kind of stuff. We'll get into that in a second. So I'm in Dallas, and every time I got an order from one of my customers, I would call Chicago, and you'd hear all that yelling and screaming, hey, Barry, blah, 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 all that in the background, and I was like, I got to go there. If you want to be an actor, move to LA. If you want to be an investment banker, pack your stuff and move to New York. If you want to trade, Chicago. That was the center of the universe. Well, that's changed now. So that's the center of the universe. That's where I've got to be. So 1996, with $400 in my pocket and my one suit that I own, I put everything in a U-Haul and I moved to Chicago. And I went down on the floor of the exchange, and I swear I'm not lying, the first time I walked onto the trading floor, I got a lump in my throat. Seriously, it was completely overwhelming. I was like, this is it. This is what I got to do. I'm in. So I lived in an apartment, 5 guys in a 2-bedroom apartment, and started working. Eventually, I got my seat on the exchange. So this jacket represents my seat on the exchange. Eventually, I had 4 of them. Okay? Now, when you get a seat on the exchange, you get this. It's called your badge. When you walk into the pit, let's say that's the corn pit, that's the cattle pit, that's the hogs, and that's the wheat. If my customer says, go buy some wheat, I walk into the wheat pit, and I say, okay, guys, what's in the December wheat? Because I'm interested in maybe buying some, selling some, whatever my customers want to do. So I talk to the customer on the phone. He says, I need to go buy 50 D-Sweet. I go, yeah, hold on. I walk in the wheat. Hey, what's here? D-Sweet, what's here? And when people, they do what's called making a market. Some guys say, I'll pay a half. The other side says, I'll sell it 3/4. How many should you sell at 3/4? 50. I'll buy your 50. Done. I walk back to the phone. I call the customer and say, you bought your 50 D-Sweet and 3/4. Well, whatever in 3/4. Done. And you hang up the phone. And that's how it happens. And it's the single most inefficient way that you could ever imagine to do business. Now that has all gone to computers, obviously. Okay? So, but when I walked on the floor and I saw all that, I was like, I'm in. So when I got my seat on the exchange, you have to pick your symbol. Okay? So I was introduced as Trey Knippa. My real name is Herschel Curtis Knippa III, which makes my initials HCK, okay? Most people pick their initials, but HCK looks a lot like Hick. I'm from Texas. I challenge you to find anybody from Texas that wants to be called a Hick. I'm out on that. So then people typically go to their college. So I looked up, TCU was taken, Frog was taken, Bear from Baylor, that was taken. MIT, that doesn't work because if you remember correctly, for anybody who has history trading, there's a kind of order. When you enter a stock order, for instance, you can buy at the market. There's one order called a market if touched order, and that's called an MIT order. So I couldn't have my symbol be MIT because that's a kind of an order, so that's out. So I chose Waco because I went to Baylor. And for 18 years, on every TV station, including CNBC, Fox Business, Al Jazeera, BNN in Canada, BBC in London, they referred to me as Wacko. I have been referred to Wacko in I don't know how many cities, I don't know how many continents, but I have been known as Wacko. Not one single person in the 18-year history that I was down on the floor, not one person came up and said, "Oh, Waco, did you go to Baylor?" Not one. Not one ever. "Hey, Wacko, what's up?" Thanks a lot. So I go down the floor and I started out trading cattle. And that's with this badge right here. This is the badge to get onto the floor, the little turnstiles to get in, right? And then this is my office. Okay, so you got to have a ton of pens, obviously. And then, you can imagine somebody's office. They probably have pictures of their kids at their office. So there's my daughter. She's 13 now. All right, there's her playing volleyball. So this is my office. This is where I work. I walk down, had my pens, put on my jacket every day, got my stuff, got my cards, and started trading. And then eventually the business transferred over to trading on computers, okay? So now, I started out trading cattle, and that was where I first started learning about options, puts and calls, and spreads and straddles and strangles and all that kind of stuff. So that's where I really started learning how to trade option, understanding option theory, understanding the Black-Scholes pricing model, if anybody's studied that yet. That's where I was learning, because I was seeing it in real time, okay? The trading floor of the Merc. You will never in your life walk into a single facility that will have a larger range of incomes and a larger range of education levels. And here's the punchline. They're not correlated. I know a guy with a net worth of at least $100 million with a 9th grade education. I know another guy who's got a PhD from the University of Chicago, and he cannot trade his way out of a sack because he thinks too much. He overthinks it. He does all this research and blah, blah, blah. But sometimes guys just feel it. Man, wheat's going up. I got to buy some wheat. They walk over here and they buy some wheat and they're done. They're just traders. They just get it, right? And some guys just sit there and study and study and study and they don't make any money. That's the way it goes. So I started out in the cattle, and randomly one day something had happened. I think it had to do with mad cow disease or whatever. And somebody wanted some commentary on a local TV station because cattle prices had gone like this. So they're like, "Trey's a loudmouth, ask him." So I walk over there in front of the camera and I start talking to the guy. And then he's like, "Well, what else?" So we got along well. It was like on WGN in Chicago. I start chatting about cattle. So then the guy says, "Hey, that was really good." And this producer approaches me and said, "Hey, well, what other markets can you talk about?" So I started following crude oil, because and this is a big point of the presentation, you're going to quickly figure out that financial markets are all glued together, and they all have something to do with one another. So it didn't take me long to figure out that if I was going to trade cattle, I think we called this the cattle pit, not the wheat pit, I think that was corn back there. You can't trade cattle properly without knowing what corn prices are going to do, because corn prices are a big input to cattle prices. So if corn goes up, the cattle darn sure better go up too. Otherwise that math's not going to work, because that's a cost of production. So then, if crude oil is trading over there, well, what's the cost of production of corn? Well, a big part of that is fertilizer costs, which is originated from energy prices. So all of a sudden I started gluing that stuff together, and then suddenly I kind of started gaining a bit of a macroeconomic sort of approach to things. Okay? So, big break comes along. Big break happens for me in 2008. So if you remember correctly, 08 financial crisis, all that stuff was going on. By then, I've got 4 seats on the exchange, businesses are doing well, trading well, this and that. Well, it was perfectly obvious that something was very, very wrong. And so I bought 1,000 crude oil puts and paid 2 ticks, which I paid $20 for them. My total out-of-pocket expense was $20,000. And at that time, crude oil was about $150 a barrel, and then it started down. If you remember correctly, it went all the way down to $33 a barrel. Okay, now I was, by the way, if I'd have held it, we did the math one day in my office, and it was, if I'd have held it all, it would have been 60-something million in profit. If I'd have held it all. I didn't hold it all. But I saw something in the global landscape that I didn't like. I saw that risk assets were not the place to be. I knew the stock market. So when Lehman Brothers declared bankruptcy, I went to the airport in Chicago and I bought a ticket with some of my buddies who actually live in Dallas, and I flew to Buenos Aires, Argentina, and stayed there and didn't answer the phone. Everybody just leave me alone, because I knew I was right. Because one of the problems of being down on the floor is that you're constantly looking at your position, you're looking at money, and this, that, and the other, and you're tempted, man, I bought this wheat, I might come over here and get out of it. So I was like, I gotta get out of here, I know I'm right, and I left. And I went to Buenos Aires, Argentina. And there was one moment, there was a course of 2 weeks, where 3 of the days of those 2 weeks, I made $800,000 a day on my position before I started liquidating it. Now, I didn't liquidate it, I liquidated way too early. But that was a huge break for me to put on this massive position and then, you know, and actually ride it and not be a pinhead and go in there and, you know, hey, I just made 20 grand, let's take it, you know? So anyway, so during that span of 2 weeks, I cleared a little over $10 million. Not bad. I think, I was been 38 at the time. So then, I make the genius move of getting divorced and giving half of it away. So you give half of it to taxes, some to the state of Illinois, some to the feds, half to the ex-wife. Great, way to go, Trey. But in that time, I started really getting a glimpse, because now I'm starting to go on TV regularly. And now they're asking me about stuff. And the one component that I didn't talk about when we were talking about cattle and corn and the crude oil that costs to make corn, and that is currencies. Okay? There's a book that you should pick up and you should read. It's by a guy named Jim Rogers. You can't miss him. He wears a big bow tie, like Mr. Rogers, right? Jim Rogers, he writes this book called Investment Biker. And that was my first foray into currencies. And here's why. Remember that if I'm going to do business with a country, I have to accumulate their currency in order to do business with them. So the exchange rate of what that currency costs versus what my own currency is worth, that matters, and it matters a lot. It actually might matter more than the relationship between crude oil and corn. So now I started going, what makes currencies move? Well, lots of things make currencies move, but one of the biggest things that makes currencies go is demand to do business with that country. So whatever country you are, I need your currency to do business with you. That's pretty darn important. Because now all of a sudden, if his currency's going too high, listen man, I can't afford to do business with you because your currency costs too much. So now you've got, what happens is, and right now, I've now become friends with a guy named Jim Rickards. Jim Rickards wrote a book called Currency Wars. Sorry, Jim Rickards wrote Currency Wars. He's written some other New York Times bestsellers. But he has really summed up what's happening right now, and what is really driving currency markets today happens to be debt, okay? For instance, when the debt of a country, Japan is a great example. One of the reasons that Michael and I know each other is because I started a hedge fund that has a massive, massive levered bet against Japanese government debt and the yen. And it's pretty obvious as to why. This requires a little economic history, so bear with me. In the early 90s, the Japanese, by the way, the story is going to sound really familiar. In the early 90s, the Japanese had a real estate bubble that popped. Now, you think we had a bubble in 08 in the United States? Ha! In Japan, there was 2 square miles of property in downtown Tokyo that was worth more than all of the real estate in the state of California combined. That is a real estate bubble. We're currently seeing a real estate bubble in China as we speak, also in Australia for different reasons. That's the Chinese trying to get their money out, and they got to put it somewhere. So they're buying property in Bangkok, Thailand, They're buying properties in Australia, Canada, et cetera, et cetera. But we'll get back to that in a minute. Oh, by the way, don't hesitate to raise your hand, because here's why. I am the single worst, I may not be the worst, but I may be in the top 3 worst public speakers that ever drew breath. You know why? Number one, I kind of ramble along and I bounce around. And the other problem is, look at where I worked for 18 years. I talk too loud, I talk too fast, I'll end up using terminology because I think everybody knows it. So you can just raise your hand and go, hey man, I have no idea what you just said. Please define that. Don't worry, it's cool. Because what do you think we did on the pit every day for 18 years? Interrupt each other. You know, one guy's sitting there, hey, I'll pay more than that. So don't sweat it. You're not offending me one bit. So the Japanese, I started doing some research about Japan. You have this real estate bubble that pops. What was the natural policy response of Japan? Now, in theory, if you have loaned money, imagine you're a Japanese bank. I lend you money, and you overpay for an apartment in Tokyo. Well, suddenly you can't sell that apartment. So what happens? That loan goes bad, right? She can't pay me back. So that puts strain on the banking system. Okay, well maybe the bank should have been smart enough to not lend on something. They naturally thought prices were going to keep going up and up and up. So they kept lending, and that just fueled the bubble. So now people are using their appreciating asset to borrow more against it. Hey, I bought something for 200 grand, now it's worth 300, I've got 100 in equity, I can take that and I can lever it up and go buy some more. That's how property bubbles, they get inflated, right? So, they have this bubble that pops. Maybe the bank should go under, right? They're the ones that made the bad loans. Maybe let the banks go under, maybe the people who made bad investments, maybe let them go under. No. Not in Japan. We can't have that, it's called saving face. So did those banks go under? No. What was the policy response? Policy response number 1, the government steps in and bails out the banks. Does that sound familiar? Sound like TARP in 2008, 2009? What did the Bank of Japan do? By God, we've got to get interest rates nice and low. So now all of a sudden the Bank of Japan drops interest rates to 0. Does this sound familiar? Like the Fed, right? So, what was the other? Now, golly, we're just not growing. We got to have some fiscal stimulus. By God, the government's got to increase spending. You guys have seen the big long component of GDP. And what does G stand for? Not in GDP, but GDP equals G plus I plus S and all that stuff. One of them is government spending. So our economists is telling me, hey, we got to get G up. We got to rally some G. We got to increase some spending. So government comes in and they start doing some fiscal spending. By God, we got to build some roads and bridges, et cetera, et cetera. So if they increase this fiscal spending, how do they pay for it? In theory, a government generates money from 2 ways. Number 1, tax revenue. Okay, well their economy just exploded, so we can forget about tax revenue. Or we borrow. So the Japanese went on a little borrowing spree. And they went on a little spending spree, as the Chinese have done right now. So they went on a little spending spree, and suddenly, you can compare countries by what's called a debt to GDP ratio. How much government debt is there versus how big is their economy, right? The United States is somewhere, I think I've got a chart of this someplace.
Roughly 100%.
Yeah, United States is 100%. Japan is 250%, is their amount of debt versus GDP. So naturally, we have been told by economists like Paul Krugman and elsewhere, Larry Summers is another one, we've been told by economists that increase fiscal spending, do it with borrowing, that'll prime the pump, get the economy rolling, and will all work itself out. Okay, so now the Japanese are in a situation where they have borrowed themselves to oblivion, okay? And they've spent all this money, and what do they have to show for it? The size of the Japanese economy is exactly the same size today as it was in 1992. Complete repudiation of this whole idea of, by God, we got to increase spending. We got to do it with borrowing. It hasn't worked. It hasn't worked at all. So flash forward to, that's their population dynamic, don't sweat it. So now, flash forward. Now the government is sitting there and it's absolutely weighed down with debt. How bad are they weighed down? This is a good one for you. Imagine you make $100,000 a year, but you spend $200,000. Wow, I wonder how long that's going to work. That's what the Japanese budget looks like right now. They have a 100% fiscal deficit. They make 100, they spend 200. Get this, how about you make 100,000, however, $50,000 just goes to interest on your outstanding credit cards. Just the interest component, not the principal. So you're spending twice what you make, and half of what you make goes to interest on your credit cards. What's the likelihood? I'll give you a hint. What's the likelihood that the Japanese government will ever pay back its debt? 0. That's never going to happen. So, in the modern world of economics, what is the policy response from the Bank of Japan, and the Fed, and the People's Bank of China, and? We can go on and on. So naturally, that bond, a Japanese government bond, is one of the riskiest assets in the entire world. You know why? Because it's worth bubkis. It's worth nothing. The chance that they're going to pay it back is 0. Do you know what the yield is on a 10-year bond? Prices go up, yields go down. Japan just moved into negative rates. You actually get charged to buy their 10-year bond. I'm sorry, what? I lend you money, you pay me interest. Not the other way around. So in theory, that is the safest asset they could possibly imagine, because bond prices go up, the value of the bond goes up, and the yield goes down. So the yield is now 0 or even a little bit below 0, right? In theory, that's the safest asset out there. It's exactly the opposite. It's the riskiest asset out there, but the Bank of Japan is buying. How are they buying it? By increasing their balance sheet and increasing the monetary base. This is QE. This is what the US Fed does. That is a cover for bad policy. It's cover for bad fiscal policy. Janet Yellen, who I'm not a fan of at all, Janet Yellen sat there and this is where she's right. She's not right a lot, but here's where she's right. She's like, listen, there's only so much we can do. There's got to be something on the fiscal side. There's got to be something coming out of government and the politicians. But I might rant just a little bit, but I know that probably doesn't surprise you. The origin of all this nonsense is corruption. It is politicians who want power and money, okay? So what politician when have you ever heard of a politician, I'm going to cut spending? Cut, cut, cut. When you start talking about cutting anything, you can just forget about getting reelected. That just doesn't happen. Do what? Bye-bye, Ron Paul. Exactly. Politicians, you can't run on that. There's no way, because I can't believe you would cut that, to widows and orphans and this, that, and the other. So they're going to continue to increase spending, continue to borrow money to do it, and you would think that if you had a functioning bond market, the functioning bond market would say, bad idea, and bond prices would go down and borrowing costs would go up. Oh, no, 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 no. Not now with these massive central banks. They can go in and buy those bonds. Great comment by Larry Summers not long ago. I'm not a fan. He's like, the 10-year bond is yielding less than 2%. That means the government should go borrow a lot more. As evidence, we see how well it worked in Japan. It didn't work at all. So why are we following? I'm from Texas, sorry, so everything's a football metaphor. But the United States has got Japan's playbook, and we're following. Dead on. Oh, that sounds like a great idea. We should do that too. And the reason is because politicians don't want to cut spending. They want to keep spending. They want to keep borrowing to do it. So, now I'm going to dispel a myth about inflation that you probably have in your head about what you've been told inflation is. Right now, everybody's like, we're in this deflationary cycle. Crude oil prices have dropped to 30. That's terrible. Deflation's awful. That's not the definition of inflation. Everybody thinks when Janet Yellen sits around and she talks about she wants to generate inflation, everybody naturally assumes that inflation is the idea that prices are going to go up. Completely false. Inflation and prices going up is a side effect. The definition of inflation is an expansion of the monetary base. That's it. Now, a side effect of the expansion of the monetary base is that you have more money going after a limited number of assets, and the price of those assets, or cost of those assets, is going up. Okay? We have seen inflation. We've seen it in asset inflation. Stock market has gone up. Bond prices are so overvalued, it's unbelievable. The French issued a 100-year bond recently, and it pays something like 4.5%. I wouldn't lend the French government money for twice that for a 1-year bond, not a 100-year bond, or you're out of your mind. There's no way. But because all that money, all that central bank print, that money's got to go somewhere. So it has driven bond prices up. So you have seen inflation. You've seen inflation in real estate. You want to see some inflated real estate? Drive over to Frisco by where Jerry Jones is building the Dallas Cowboys practice facility. Buddy of mine bought a house for $450,000. 3 years later, sold it for $800 grand. Winner. Well, he bought it right and sold it right, but there is inflation. Look at what stock prices have done, et cetera, et cetera. So when the Fed and the central bank start printing, the money's got to go somewhere, and you have seen inflation. And everybody sits around going, wow, boy, we just haven't seen any inflation. So now, if I've just defined for you what inflation is, it's the expansion of the monetary base. When we do QE, does that expand the monetary base? Yes. Let's talk about China for a second. I already described Japan. Japan is doing QE like crazy. They're buying their own bonds, issuing more yen. What does that do? Expand the monetary base. More yen coming on the market, expanding the asset base of the central bank. Print more money, they buy more of these bonds. So let's talk about China. In 2008, when we had the global financial crisis, I'm going to pick on communists a little bit. So, in China and other places where you don't have votes, you don't have voting, Venezuela is one of them. The only way those leaders get thrown out of office is through revolution. It's not going to happen through a vote. In China, you don't march down to your school district and your fire station and throw out the government, right? It doesn't work that way. So if the whole idea is to stay in power, what do? You got to keep them fed. That's it. That's how revolutions start. There's proof of this, and it's happened in our lifetime because it's happened in the Middle East. You do know that what they called the Arab Spring. That started as a food riot in Tunisia. It was over wheat prices. Okay? People get hungry, they start getting pissed off at their government. It just happens that way, okay? So the Chinese are aware of this. They've got to keep these people working. They want to keep the economy going. So here's what started happening. You had an infrastructure spending boom and a lending boom in China, and that's when it started. You do realize that in the last 10 years, the Chinese banking system has grown by 1,000%. More lending. Go build something. Here, take some money. Go build something. Go build something. But here's the trick. Here they have expanded their banking system. When the expansion of the banking system, there's been more money issued. There's been more money loaned out. That's what expansion of the banking system means. Okay? So now, if they sit there and they've loaned all this money out, the money's got to get paid back, right? So now you are just on the front door of the first wave of a default cycle. So I lent you money, you built your apartment building, and now you need to rent out those apartments or sell them as condos or whatever. Now, so I come to the bank, hey, margin call, let's get those payments coming. You look at me and you say, I can't pay, I can't rent these places out. So I say, I call the note on the bond, on the loan that I gave you, and I say, hey, you owe me this money. You say, hey, I can't pay. Default, loan defaults. You are starting to see that in China. There was one interview that I read today, or one letter that I read today, that the potential losses by Chinese banks could be 3 times what the bank losses were during the financial crisis in the United States. Now, you're talking about an economy that's not nearly as big as ours. What I'm telling you is that there's problems. So how am I positioning myself? By shorting the ever-loving crap out of the yuan. So I expect the Chinese government to have to recapitalize its banking system. They're going to have to bail out all those banks. Hadn't happened yet, but it's coming. And every avenue that the Chinese have in front of them, every single one of them has to do with devaluing the yuan. Number one, the citizens of Japan are starting to get nervous, and you're seeing capital flight. And when you see capital flight, then you start seeing the Chinese see their foreign currency reserves start going down. In order to stop that, that means that the yuan's priced too high. They need to devalue it. Right now the yuan's at 6.58. I think it's going to 12. And I've got big levered bets against it in case I'm right. So when you hear devaluation about the Chinese yuan, you're going to go, I remember that trade guy was talking about that. I bet he's rich now. Good. So, I'll take a break. I'm going to have some water. I know I talk too fast. I talk too loud. And if anybody's got some questions or whatever, we'll kind of take this wherever you want to take it from here. And I have the greatest piece of career advice you'll ever imagine. Coming up, that'll make you stick around, right?
So here's my question. You're talking about the one opportunity. How do us poor college students, let's say we have a grant, how could we possibly take
No idea whatsoever if you have a grant. I don't know. There's a futures contract that trades in Singapore. The other thing that you can do is Saxo Bank has an FX account that you can open. You can get 40 times leverage. So in theory, you could have $1,000. You could lever it to a $40,000 position. That's where you start. Because you open an FX account and you can short the won. Now the problem is that interest rates there are higher, but that's going to change. What's another way that the Chinese they're going to naturally want to lower interest rates? As they lower interest rates, that will weaken the won also. So right now, to put on this trade, you have to pay the difference. So like, if my money in the United States costs 2 and theirs costs 6, I've got to pay the difference to carry that position. Saxo Bank with an X, S-A-X-O is the name. You can open an FX account and you can short the won through that for smaller dollar amounts. Make sense? All right, here's your greatest career advice ever. You ready for this? There was a book that I read when I was at Baylor studying finance. This book has been a cancer in my mind ever since I read it, and I was 19 at the time. And that book is called The Random Walk Down Wall Street, written by a guy named Burton Malkiel, okay? The principle of the book is that no matter how hard you work, there is no statistical advantage. He was talking about fund managers, that you should just invest in the index. You should buy the S&P index and hold on to it, because no matter how much work you do, it'll always revert to the mean, and you'll always go. If you just invest in the index, you'd be better off. Horse crap. Because here's where the cancer got stuck. It went into my ear and it stayed there, and it has plagued me in my career ever since. And that was, I got the idea of what's called the efficient market hypothesis, which is absolute nonsense. Because I, being a jackass, applied the efficient market hypothesis to my entire life. And I have literally had ideas that I thought were genuinely good ideas. And I bet every person in this room has had an idea. And do you know what that voice inside your head said? Somebody's already thought of that. I'm just a college guy in North Dallas, or girl. I couldn't have invented something. Don't do that. Follow those ideas. Explore them. Hell, some of the best ideas in the world were ideas that somebody else had thought of already, but maybe you did it differently. Don't turn your back on those ideas, please. Do not believe in the efficient market hypothesis. Do not sit there and come up with an idea and say there's some really smart people in this world. Somebody is bound to have thought of this. That has existed like a cancer in my mind, and I have missed many, many opportunities because I said, well, I'm not that bright. Surely somebody's thought of this. Don't fall prey to that. It's absolute nonsense. Follow those ideas. Explore them with your friends. The other thing that I would say is do not underestimate the value of the social connections that you're going to make in your school and in business. Because what's going to end up happening, here's the other cancer that has existed in my mind. I might have an idea, but I don't want to tell you about it because it's the greatest idea and you're going to steal it. Don't do that. Take those ideas and sprinkle fertilizer on them with your friends and with people you know about. Because here's what's going to happen. Now I've got a bunch of buddies at MIT. So we have like an alumni thing that we go every year. We'll go to some hotel or whatever. We hire guest speakers and we hang out and we do all this stuff. Hey Trey, what are you working on? So I've got this idea, this, that, and the other. And then one of them goes, well, hey, I know this guy who invests in that stuff. If I'd have gone, no, I've got this idea, I can't tell anybody about it, blah, 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 blah. That guy would have never said, hey, I know this other guy in New York, he loves companies like that, you guys should talk. Share those ideas. Use your friends and your contacts as water and fertilizer, and get those ideas going. Don't sit around, number one, thinking somebody else is smart and they've already thought of it, and number two, that somebody's going to steal it. Oh, no, I can't be telling anybody. No. It's nonsense. Be proud of those things. Take them forth. Put some light on it. Trust me, it's sound advice. So, more questions? Come on. You guys gonna keep making me talk? I gotta have some more water if that's the case. So I had yeah.
So where did you get your ideas from, like, when you were in college?
Truthfully, it was more interests than ideas, I'd say. literally seeing the movie Trading Places with Eddie Murphy and there are just things that just, for lack of a better term, they just turn me on. You know, it's like you will find that if your eye keeps going to the same section of books, I realize that nobody goes to the bookstore anymore, but you get the idea. If your mind is wandering towards certain topics, follow those. One of the most successful people I know is the biggest knucklehead in the planet, and he used to, when we were kids, he was the guy who helped me like install my speakers in my car and all that stuff. And now he owns like 50 car audio stores throughout Texas. I mean, if you go and you have these things that you love doing, then look for financial. I don't know who said it, but the richest guy in the world is when he goes to work, it's not work because he loves to do it. I told you when I walked on the trading floor, I got a lump in my throat. It was the coolest thing ever, right? Well, I'm not saying that it would affect you the same way, but there's something out there that does turn you on. And you may not think that it's taught in the business school or whatever, but having those interests and having that passion towards something, follow that. You know, I have a passion for teaching. I coach boys, 4th grade boys football. You know, I love football. I grew up that big and that big around. I didn't play football, but I've always dug it. So I enjoy watching it. I enjoy being around the kids, and I enjoy, you know, just being around the sport, just because I think it's cool. Is there a business opportunity from it? No. Oops. One of the dads of the kids on the team that I coach, one of the dads, a hedge fund manager downtown, and says, "Yeah, hey, I saw you on TV. Let's do some business." Boom. That wasn't the point of going to coach football. The point is that socializing and networking and doing something you love. If you do something you love, then the problems will solve themselves. It's in there. There's something you're interested in. I know it. Other than Snapchat, like my daughter. Surely that I don't know if there's a career path in Snapchat, but if there is, Parker's got it, right? She's 13.
Social media manager.
Right, yeah, exactly. The Japanese one, right, Michael?
Oh, okay.
I put out a letter today, and I talked about shorting the Chinese yuan, and my esteemed social media manager wrote Japanese yuan on there. So I had a few people email me back and tell me that I messed up. There you go.
There's gold right there.
Book recommendations. Investment Banker by Jim Rogers. Jim Rogers gets on a motorcycle, his girlfriend gets on another motorcycle, and they literally ride around the world. And what he finds when he gets to new countries is he evaluates the investment worthiness of a particular country, and he quickly learns that there are things that kind of trigger his mind as to, is it a place that he wants to do business in? Number one, how easily is it to cross the border? You know, are they pro-commerce? Are they, you know, how easy is it to convert the currency? Quickly he found out that on the countries that have real problems, they would have black markets for the currency, right? So I walk in with some US dollars. This is happening in Cuba, as a matter of fact, right now. It's happening in Argentina, and it's happening in Venezuela. So I walk in with some dollars, and you can go to the bank, and the posted exchange rate is 9. We'll give you 9 Argentinian pesos to the dollar, whatever. And then you go there, and then you walk around the corner, and hey, buddy, hey, amigo, come over here. Hey, I can get you that exchange rate at 15 rather than 9. Doesn't that sound bizarre to the people sitting in this room? Why would there be 2 exchange rates? That doesn't make any sense. The reason there is that's the people of Argentina trying to get their money the heck out of their own currency. That to me smells like a problem. When you've got a posted exchange rate and then a cheaper exchange rate, the black market for the exchange. I learned about that by reading that book. By the way, this is also happening in China. Chinese citizens are willing to pay a discount to get their money converted because they think there's a problem coming. Why do you think I want to be short the yuan? For that very reason. The other one is Venezuela. Venezuela, their restaurants put their menus in chalk because the price might change from the beginning of dinner to the end. They've got it's like 100% some odd inflation, right? Because all they've done is just print Venezuelan pesos or whatever it is. But anyway, remember, the nature of inflation is not that the value of dinner in Venezuela, in Caracas, is going up. That inflation is a monetary thing. It's because of an expansion of the money supply. That's what inflation is. It isn't, the prices is just an outward sign of that, right?
You know what's real big in Venezuela right now? Bitcoin.
Oh yeah, in China too.
Yeah.
You can transfer money out.
Anything that'll go
I
around.
tweeted about that the other day. For those of you on Twitter, my handle is CME Trader. Go back to short Japan debt, Michael. Go to the very bottom. My email's on there someplace, isn't it, Michael?
It should be.
All right. So the website is Short Japan Debt. I write a newsletter. Sometimes it comes out about once a week if I see an article I like, if I write something, whatever. You can register for the newsletter. It's free. And my address, my email address is Tres, T-R-E-S, at shortjapandebt.com. The reason I'm giving you that is the same email address my mom has. I'm an accessible guy. If you have questions about some of the things that we talked about today, send me an email. I'm not going to get back to you within 5 minutes, but I'll get back to you eventually. Okay? So you're pondering some of this stuff. Hey, Trey, what do you think of this? What do you think of that? Just email me. I'll get back with you. I promise. Like I said, I'm an accessible guy. Questions? Anyone? Yes?
Well, what do you think about the gold today? And it's went up so high.
Yeah, so isn't it interesting that we always, like, gold gets lumped in with commodities. And they say, well, you know, crude oil's down, why isn't gold down with it? So the way I see it is that gold has a massive tailwind right now. Why? Because gold is a hedge against the expansion of the monetary base, right? So let's see. The Chinese are about to go on a massive expansion of their monetary base. According to my thesis, they're going to devalue the yuan. They're going to have to bail out all these banks 3 times bigger than the U.S., et cetera, et cetera. So they're expanding the monetary base. The Fed, the U.S. Fed, raised rates briefly. That firmed up the dollar. Dollar goes up, gold goes down. And now all bets are off. Now everybody's like, oh crap. Stock market's gone like this, some of the data numbers, and now Janet Yellen's like, oi. You know, she's like, I can't believe this. So in my mind, gold is what directly affects gold is an expansion of the monetary base. If the monetary base keeps going up, then gold's going to go up also. Well, Japan's going to keep printing. The U.S. might start QE4 eventually. You know, they raise rates just a little bit. Markets have all gone, now the dollar's not acting great. So I expect QE4 to come back. I already told you what I think of the Chinese. So I think it was just a matter of time. Now gold went from what, 1900 and something down to 1100, right? And everybody's like, oh, gold doesn't matter, oh, this, that, and the other. The dollar was firming up at the time. We were coming off of QE, right? We did the taper, we cut off QE, and then we were starting to raise rates. Well, as you raise rates, that increases the US dollar goes up. So dollar goes up, gold goes down. So technically, gold should have acted a lot crappier than it did. It should have gone below 1,000. Then crude oil crashes from 95 to 30. Wait a second, why isn't gold breaking? And now, all of a sudden, the Fed is kind of dovish. The Fed's like, oi, I have to indict Janet Yellen here just because it's fun. So, Janet Yellen, back to the football metaphor, is how in the world do you promote somebody who does a bad job? Okay? I've never quite understood this. 2006, you can look it up. Ben Bernanke is getting sworn in as the new head of the Fed from Alan Greenspan. Remember that? Janet Yellen, in her speech, said that as Ben Bernanke takes over as the new head of the Federal Reserve, no one has ever taken over the Federal Reserve with the economy in such good shape. Everything is so rosy, everything's marvelous. This is February of 06. We are on the front door of the financial crisis. The Fed has one job, to sniff that out, right? And she missed it. Then, it had already started. And what did Ben Bernanke said the same thing. He said it when he went on CNBC. He's like, you know, we've never seen housing go, like the entire United States housing market. You can see it. He was suggesting that it goes down regionally. Like Atlanta might drop, but that doesn't mean Jacksonville. He's like, we've never seen a broad-based decline in real estate that would affect the United States. And even then, It wouldn't affect GDP. Real estate's not a large enough component that would adversely affect GDP. That was the sitting Fed chairman said that. In other words, we don't really see housing prices dropping, and even if it does, we don't see that adversely affecting GDP. Wrong, Ben. And Janet Yellen mirrored those sentiments. And what did we do? Gave her a promotion to the head of the Fed. So now she waits and doesn't raise rates until January of this year, and I think we're right on the front doorstep of a recession. So here she is, she waited until we were on the front door of a recession and then raised rates. You want to raise rates during strength. You do realize that if you look back on interest rate rises in the past, the stock market rose with it. Why? Because there was strong economic growth, and the Fed was raising along in that. She raised into weakness rather than raising into strength. She's in over her head. I don't think she's dumb. I just think that she's using the wrong models. I literally think that she's like, the best way to make this pen stick into the ceiling is to drop it. That's what the Fed is trying to do. They are literally fighting the wrong fight, and I just don't think they get it. The Japanese are expanding the supply of yen. The Japanese need more babies. They need more Japanese people. They don't need more yen, so they need to print babies. They don't need to print yen. By the way, there's only two ways to make GDP go up. Well, there's only two. This isn't magic. An increase in population and or an increase in productivity. That's it. So, by all means, which one does expanding the monetary base do? Babies or, no, neither. That's a trick question. Neither. That doesn't affect GDP. That's not how you get GDP going. You're all fired up on the gold thing.
Oh yeah, the COMEX ratio. This is the old chart.
This is going to get a little wonky, so I apologize. But the futures market where they trade gold is called the COMEX. Okay? So, a futures contract, for those who don't know, I traded it for 18 years. A futures contract is exactly what it says in the name. It is a contract for future delivery of something in the future. That's why you have January gold, February, April gold, June gold, whatever. And it is a contract. I enter into a contract with you to deliver gold in December of 2016. Right now, that's just an obligation, right? We don't actually exchange the gold. We don't actually exchange the gold until you get to December. Let's say I bought it and he's contracted to sell it to me. In December of 16, I can say, give me the gold, okay? But until December, it's just paper. It's just a contractual arrangement. So the COMEX is what they call a fractional reserve exchange, meaning that they don't actually expect all that much gold to actually change hands. However,
that's old too.
Yeah, this is an old chart. What has happened is that gold is being taken out of storage because people want the physical gold. They want to hold it, touch it, drop it on their foot, and it hurts. They want to own that, not the paper. They don't want to own the contract. So a lot of that gold is coming out of the warehouse. So this is an old one, but when that was drawn up, there are 120 arrangements, contracts, for every 1 ounce of gold that's in storage. That's a little scary. And recently it went up to, I think, 300 and something.
540.
540, okay. So you had 500 some odd contractual agreements for every ounce of gold that was in there. That's problematic. The reason it's problematic is that at one time, it got down to $300 million worth of gold, that if somebody said take it, that would exhaust the entire supply that's at COMEX. $300 million is a lot of money. I've got slightly less than that in my pocket right now. It's a lot, I realize that. But in the world of high finance, $300 million is nothing. The University of Texas has $1 billion worth of it. So here the COMEX, where the majority of futures contracts are traded, only has 1/3 of what the University of Texas owns. That's not jack crap, that's nothing. So if some sovereign nation or whatever says, give me the gold, and COMEX runs out, that's some nasty stuff. That's some news-making, kind of thing. So anyway, he kept raising that chart, so I know he wanted to talk
Don't
about
have
it.
the clearinghouse that was supposed to be make sure that everything is delivered.
In theory, but if the gold's not there, the gold's not there. There's other things that they can do. They can go and they can make what's called a cash settlement. They can say, well, we realize that there's all this demand for the gold, and they can do a cash settle. And what the problem is that they'll say, we'll cash settle you on yesterday's price. Well, if they run out of gold, I can assure you that the price is going to keep going like this. You know what I'm saying? If it ever got to that point. That's their defense mechanism against that.
One thing to add to that is I think the only serious futures market that's traded right now that does full physical back was the Shanghai exchange.
And that trades at a massive premium to our paper contract by a lot, because it's the actual gold itself. Gold's a quirky thing. I've learned a lot about it, and it's interesting. And it's like it's the rabbit hole of finance. You start reading about gold, or you pull it up on the internet. Oh Lord, you'll get an aluminum foil hat in no time. There's some weird folks. I know everybody's got things to do. I happen to be one of them. I'll stop if there's. I know we're going to go out and have a beer at some local happy hour place, whatever. I'm going. I'll stick around for a little while. I've got a date later, but I'll stick around for a little while. We can hang out, talk socially. I'm game. But if there's people who need to go because you got to study or whatever, that's cool. But I'll hang around for a few more minutes, answer questions, hang out. I know there's plenty of pizza still over there, and then we'll go over this other place. But I'm not kidding. You have my email address. Use it. You get some ideas. You want to, hey, I've been thinking about this, whatever. Like I said, I won't get back to you in 5 minutes, but I'll get back to you eventually. Trey, Tres, @shortjapandebt.com. You can also go to shortjapandebt.com, register for the newsletter. Whenever I push something out, you'll get it. You can read about it.
And a typo every once in a while.
And a typo every now and then, because my social media manager makes mistakes.
What can be done now as far as Jack Yellen said? Like, what can they do? Like, they shouldn't raise interest rates anymore.
Yeah, they're not. Her tone to the Senate was like, so here she's talked about that she wanted to raise rates 4 times this year, and the tone to the conversation to the Senate was that she will eventually consider negative rates. It's like, well, which is it? Do we want positive rates or negative rates?
About contract again. So do you think, because right now we're doing stimulating the trading, do you think we should long oil right now?
Yes. If you have enough of a time horizon, you do realize that global demand for oil has not dropped.
Yes.
Right? So wait a second. If demand hasn't gone down, now granted there's supply issues, this, that, and the other. I actually think that when oil prices started down, the Saudis, we went to the Saudis and we said, don't you dare cut production. Drive prices into the ground. Why? Because it's a de facto defense policy. We've heard virtually nothing from ISIS recently. Not as much. You heard, who do you heard with oil prices? You heard Venezuela, you heard Iran, Iran's a weird story, but you heard Iran, you heard ISIS to some degree, you heard Russia, and if you remember correctly, remember when Russia was doing all that saber rattling around the Crimea and all that jazz? Then there was talk of the Russians going to invade the Ukraine. And right after that, oil prices cratered. And then the Russian ruble collapsed right after that, right? So oil is one of those things. So I actually think we went to the Saudis and said, don't you dare cut production. You drive prices into the ground. And oh, by the way, you heard the Texans and the South Dakotans. Do you really think President Obama cares about that? Great. So Texas, so that hurts the Texas economy, who gives a shit. That's what he said. I actually think he used it as a defense tool or tactic or whatever.
Not as much Republican campaign funding.
There you go. Yep. There's another book you should read. I mentioned Currency Wars by Jim Rickards. That's a really, really good book. He also is a friend of mine, so he'll appreciate the plug. So his daughter's my press agent. So I get his scraps. Like if he can't go on TV or whatever, or do some interview, then she calls me and says, hey, can you fill in, for my dad or whatever? So, good work. I can't think what else is on my reading list lately.
The new one from Jim Rickard.
Yeah, just look for Jim Rickards and download them all. He's got Currency Wars, he's got Death of Money, same kind of thing. He's got a new one about gold that's coming out that I thought was really good. This book is not out yet, but I got an advance copy and I read it, and because we're friends, And his idea of the reason that the Chinese are accumulating gold is because the Chinese own a massive amount of US treasuries. Well, what does our Fed say constantly? They're trying to generate inflation, okay? Inflation, expansion of the monetary base, right? So if I own a bond and the stated policy of the Fed is that they want to generate inflation, you do not want a low-yielding bond in an inflationary environment. If prices are going up 5% a year, I better be generating 5% worth of interest, otherwise I'm losing money. That's the difference between real and nominal rates, right? So if we're sitting there saying we want to get inflation, and then so the Chinese sit there and go, well, we own all these treasuries. We really don't want inflation in the US, right? So how do they hedge it? They hedge it by buying gold. So I think they're hedging their treasury portfolio. I shouldn't have said that. I said that in the first person. Jim Rickards thinks, I'm just re-quoting him, that they are buying gold to hedge their treasury position. I was like, crap, I can't believe I didn't think of that, because that's bright. But yeah.
They want to make sure it's physical.
Yes, they don't want the paper between he and I and December delivery. Yep. Anyone else?
Is there any impact that you can feel in the commodity or currency trading market from the high frequency trading? Because I know it happens a lot in the...
Have you read Flash Boys by Michael Lewis? Michael Lewis is a spectacular writer. He's written the best book about baseball ever, Moneyball. He wrote one of the books that got, so when I was in Dallas, I was a stockbroker. When I said I was a phone banging chimp, I read the book Liar's Poker. And when they were handing out job assignment, he worked for Solomon Brothers, right? So they goes through the training program, and everybody wanted to get on the mortgage-backed securities desk and all that jazz. And there was one job that nobody wanted, and it was called Equities in Dallas. And at the time I read the book, I was a stockbroker in Dallas. I was like, this sucks. You know, I don't want to be that guy. And so, obviously, I had a taste for wanting to be in Chicago. But Michael Lewis is a great writer, really nice guy, too. I've met him a couple times. And so, because I was on the floor, and because everything went to the computer, and now I don't have to wear this silly jacket all the time, right? And naturally, you would think I would have some axe to grind about high-frequency trading, or trading, computer-based trading and all that jazz. Nothing could be further from the truth. The reason is that you will never, ever meet anybody who's more pro-free market than me. If you figured out a way to legally do what you did, and you just had a faster program, your wire got from the Chicago exchange to the New York exchange faster than mine did, and you scraped those pennies up and you made money, good for you. That's what I say. However, then I read Michael Lewis's book, and now I learned that it was the big part of the high frequency stuff is an inside job. It is they're purposely setting up routes where some people have slower, like everybody at this table has an E-Trade account and they're buying their stock. And then so this company over here will buy that order flow and purposely route it so that their high-frequency traders can get in front of it and steal from them. That's what it is. So I read that book, and I was always like, free market, if somebody came with a better program, good for them. And then I read that book, and I was like, yuck, that doesn't sound quite right. But at the end of the day, I'm a degenerate speculator, right? Now, I say that with some jest. But how many times, the Venezuelan president right now, I can't remember his name, it's not Maduro, but whatever. He's like, the reason there's inflation and all these prices are going up is because of all these businessmen and they're hoarding these products and all this kind of stuff. Give me a break. Being on the floor of the exchange, every time the cattle market would go down, some cowboy with a big hat and a big belt buckle, that's them darn speculators getting in our market. It should only be for cattle people. Horse crap. That's what I say to that. Is it speculation if I go down and I rent a piece of property at the end of Frankfurt Avenue and I build a dry cleaners? I think that the market in that area needs another dry cleaners and I'm going to start that business. Do you know what that is? That's speculation. And it's the backbone of America. It's as good as it gets. And you know what? If that dry cleaner doesn't work, if there was one right next to it and I blew it, tough crap. I'm out of business. That's the way it should be. Well, now, in the financial crisis, our banks didn't take a hit. A lot of those equity owners didn't take a hit, and that makes me sick. Having capitalism without having bankruptcy is like having Christianity without having hell. Doesn't work that way. You got to be punished if you make a mistake. That's all there is to it. When I was on the floor and I made mistakes, I got punished for it, right? Is it speculation when a rancher, he's building his herd? You know, believe me, I heard it so many times. Those darn, and they would attach an ethnicity to it. I heard that a bunch too. You know, those Jews in Chicago are messing up our cattle market. I would go give speeches, and I'm like, well, okay, I went to Baylor, so you can rule. I didn't go to Brandeis, so you can rule out the Jewish part. I've got a degree in agriculture, and guess what? If I want to speculate that cattle prices are going to go up and down, up or down, you can cram it because that's my right as a human being. Zip it. That's part of being American. But the speculators, this, that, and the other. Well, what happens when speculators run the price up? I don't see Mr. Cowboy and Belt Buckle complaining then, right? So I'm really torn on that subject. But by the way, the book's really well written too. It's called Flash Boys by Michael Lewis. Hell, read every book Michael Lewis ever wrote. He's good. But
And the movies.
And the movies. What's the Big Short?
The Big Short
is by Michael Lewis. And that was I thought the movie was really well done. The book's great too. Read Boomerang by him too. They talk a lot about Japan and my Japan thesis and all that stuff. So, anyone else?
Can you tell us about a bad trading day? One of your worst?
Yeah, that's easy. The worst trade I ever made was I've always been a runner. I told you I ran track at Baylor, right? I ran the 10,000 meters. So I bought an iPod, literally like, remember the thick ones? You guys are all too young. But I bought one of the thick iPods, and I was like, this is cool. You mean to tell me I can put 30 songs on this thing? Like I can run for a while and listen to my music. This is badass. This is awesome. So I bought 10,000 shares of Apple stock. I bought between 15 and 16, okay? 10,000, so 150 grand, 160 grand all in is what I've got in Apple stock, and at 15 to 16. You do know that it went to 1,100, right? So just to give you some framework of the story here, right? Me, because I'm a jackass, I read Fortune magazine. No one in all of finance reads Fortune, okay? But I was like in an airport or whatever, and it was sitting there, and I started reading it. And at the time, I was worried about, because I'm long real estate. I'm a big real estate bull, mainly because the Fed, that's a supported asset by the Fed. They believe in what's called the wealth effect, and they will purposely try to support real estate prices. So, hey, if the Fed's going to get behind it, I better own some too, right? So, I read this article, and it's about how Apple owns all the real estate of the Apple stores. So by buying Apple, you're not buying Steve Jobs and his brilliant mind and his technology, you're actually owning a REIT because they own all the real estate of the Apple stores. And because I'm a jackass, the stock is at 19. I bought it, let's say my average was 15, and I'm like, all right, I'm up 40 grand on my Apple stock, I'll take it. And it went to 1,100. Way to go, moron. What was the other really bad trade? I got smoked for about 80 grand one day down on the floor, and I filled an order backwards. So customer says, go buy D Suite. How much? A lot. So he gives me an order to buy 500 December wheat, okay? So now I've got this order, okay, check it, I'm buying 500 D Suite. Your order number is blah, blah, blah. I grab my jacket, I walk over to the wheat pit. What's here, D Suite? What's here? I'll sell 100 to 3/4. Buy 'em. I'm sorry, I'm supposed to buy 'em. I go, what's here, D Suite? I'll pay a half. Sold. The guy told me to buy it. Now I've sold it. Sold it a half. What's here? Quarter bid, 100. Even bid, 100. And I whack out the 500 contracts of December wheat, and I did it backwards. I'm supposed to buy it, now I'm supposed to sell it. So, now, I still owe him the 500. He can go look at time and sales, and I owe it to him at that price. By the time I figured it out, and I go back, now I've got to walk in the pit and buy 1,000 of them. So now I walk back in, you know, and they know. And what do these guys do? Being prudent speculators that they are, even bid, 1 bid, 2 bid, and they're bidding it up right in front of me. Yeah, but that's the floor. That's the nature of the beast. And they just absolutely took me to task. The other one was this is a really good one. This was a losing trade. I lost probably $500,000 on this trade, and it was the best $500,000 I could have ever spent. I was in Kathmandu, Nepal.
Oh, I'm from Nepal.
Oh, are you? I was in Kathmandu. Sorry about all the earthquakes, man. All the monkey temple and all the great spots that I went to are just decimated. I've been reading all about it. It's horrible. So I'm in Kathmandu at the Yak and Yeti Hotel.
Yeah.
Okay? And on a dial-up internet connection, and I've got on some wheat spreads. The reason I have on the wheat spreads, I can spend the next 30 minutes explaining to you, it's not important. But I've got on thousands of these wheat spreads. And the market goes a little against me, and I'm getting quotes over Yahoo Instant Messenger. I'm not kidding. It's to my broker. My broker's on the floor of the board of trade, and he's typing it to me, and I'm on this dial-up internet connection. We're talking, 06, 07, something like that. Probably 06, because that was a drought year. So I go, I'm just uncomfortable. This position's going against me. He's like, dude, we're down $200,000 in this thing. I go, you know what? I'm on vacation. I want to enjoy myself. Go blow out of these spreads. He walks into the wheat pit, and he blows out, and when he reports my fill to me, I'm like, that can't be right. We were losing $200,000. By the time you got out, we're down $500,000. What's the matter with you, you moron? If I didn't get out, the next day I would have been down $18 million. If I don't get out. Best $500,000 ever. 100, 200, 300, 400, 500. Here, I hope you choke on it. Yep. That was done literally, and it's the opposite side of the clock, so it's, you know, what was it, 9 at night then, and it was 10 in the morning here. But I was half drunk and tired and from hiking all day, and I was like, just get out. I'm sick of this crap. $18 million, which I did not have anywhere near that. So that would have been a career ender. When you start going into trading and you start going into your own businesses and this, that, and the other, this is some sage advice. Pick your spot that says, once I've lost this, that's enough. You will battle with yourself, whether you think you're smart, dumb, good-looking, ugly, whatever. All those things will go into your head when trades start going against you. The reason I say this is down on the floor of the exchange. Anybody can make money trading. It's not that hard. In theory, you can flip a coin, right? And say, heads, I'm going to buy, tails, I'm going to sell. The guys who make a profession at it, and girls, by the way, the best, biggest, and baddest trader in the history of the Merc is a woman. Her name, they call her the Dragon Lady. She's about that tall. She weighs 100 pounds tops, and she nearly crushed a Swiss bank in some interest rate play. They ended up bailing out the trade, and she got $500 million for it, and that was that. But yeah, she had a Swiss bank, and she was just like, you want some more? Okay. But anyway, the point that I'm trying to make is that how much you make when you make it doesn't mean anything. How much money you lose when you lose it. That's all that matters, right? You may make $100,000 in this trade and think you're smart. But if the next trade you do, you lose 200, define how much you're willing to lose and stick with it. That applies to Las Vegas. Stick with it. Say, all right, I'm going to go. Here's my $1,000. When you get to that point, stop. That's a horrible sexist metaphor, but be a man and just take it and say, you know what? I'm wrong. I blew it. But if you sit there and go, no, I bought this stock at 20, now it's at 10. Well, it's a bargain. I got to buy more here. Wrong, wrong, wrong. It doesn't matter how much you make when you make it. How much do you lose when you lose it? Define when you're wrong and get out of it. I could use some of that help with relationships. You know, I will ride a bad relationship too long. I wish I could have a more defined stop. Look, if this ever happens, I'm out. Right? That's what I should do better. But take that, define how much you're willing to lose, and if you get to that point, just say, all right, That was my risk, and I'm out. Whether it's a small business, whether it's a whatever, define your loss and take it. You will be very, very glad you did. Oh, but now all of a sudden, have you ever, no, of course you haven't because you're students. Have you ever been so upside down in a trade? Well, God, I've got all this invested and I can't get out now. The loss is too big. I've done that because I'm a moron. So, I've made that mistake. You don't make that mistake. Define your loss. Yep, sometimes I'm wrong. Market got me, whatever. It's not coming back. It might come back, whatever. But I'm out. Take that loss. Trust me. Anyone else? All right, where are we going?
All right. Well, I think we're at 6:30, so this is going to be perfect. Well, we got you some here, Trey, for coming out and yelling at us and making sure to figure out what's going on in the markets right now.
I really appreciate it. Thank you.
Oh, we appreciate having you out here.
Cool. Sometimes